Good afternoon and welcome to the joint meeting of the Seneca County Industrial Development Agency Audit Committee, the Seneca County Economic Development Corporation Audit Committee, and the Seneca County Funding Corporation Audit Committee. So we'll have three separate committee meetings. We will start first with the Seneca County Funding Corporation. We do have a quorum. Bruce Murray and myself are physically present. Bob Kernan is on the phone. He's not able to vote, but he'll be here virtually to attend and ask any questions. First item is approval of the audit committee meeting minutes on September 14th. Anyone have any changes, modifications? Hearing none. All in favor? Well, first motion to approve.
So moved.
I'll second. All in favor?
Aye.
Anyone opposed? No. Motion carried. Second item is a presentation of the Seneca County Funding Corp audit.
Take it away, John.
Okay. Well, good afternoon. I'm John Rinkowitz. I'm a principal with Mango Metzger Bar, and we came out and performed the audit again this year. We've been with the company for a number of years now. And just to mention, everything with the audit went very smoothly. The team here does a great job of meeting our requests. We send a big long list of items we need, and then throughout the process make additional requests for information, and they do a great job of meeting that so that we can get through our work, and everything went very smoothly this year. So you have a copy of the financial statements in front of you. There's a clean audit opinion, so no qualifications to the opinion, which is good. That's what you're looking for. The first section is management's discussion and analysis, goes through some additional information about the corporation and activities. Lots of good information, but I'm going to jump over to page 6, which is your balance sheet. Pages 6 and 7, really, which are your balance sheet and just kind of talk about some of the activities with the Funding Corp. So we know that the Funding Corp was set up and it helps issue bonds for not-for-profit organizations. So when you have a bond project, you'll see a lot of activity for the corporation. In years where don't have a project, there won't be as much activity or will be minimal. So on the balance sheet, you've got comparative statements. You notice there's not much change from year to year, right? And so if we take a look at the next page, which is the income statement, we can see kind of what activity you did have. So you didn't have a bond project this year, so no revenues, agency fees coming in related to projects, but you do have some minimal operating expenses that you're still required to meet. Professional services, which is for the most part the audit fees, and then just some minor bank fees, I believe. There. So continuing operations, you did have expenses with no revenue, so you do see a decrease in your net position year over year. You're still doing fine. You still have plenty of money to continue to meet these obligations for now. And there was no other economic development activity initiated by the Corp, so you still have money to meet your ongoing expenses for now.
Yes.
Okay. So that's kind of the financial position of the Funding Corp. So still kind of moving forward as is. You also have any questions on the Funding Corp information, the numbers or anything? No? Very good. You also have a communication and internal control related matters. So part of our testing and under governmental auditing standards, we have to look at your internal controls and make some responses. We do mention the corporation doesn't have any time allocated for some possible management expenses that may be picked up by the IDA. So, and this has been a recommendation in the past to consider whether or not there should be a study done to see how much time the IDA staff spend working on that and consider whether any allocation of expenses could be made over. Okay, so so that recommendation is still out there. You do have a letter of communication, which is a required audit based on our auditing standards, and it just describes how the audit went. And as I mentioned, everything went very smoothly. There were no disagreements with management or unposted or uncorrected journal entries or anything like that. So everything went very smoothly this year. So that's the funding report. I'm happy to answer any questions.
So, yeah, Bob, since you're not here and I can't see your any expression, do you have any comments or questions on this?
I would just report too that the previous suggestions have been considered previously, and I guess we'll answer that particular with a formal response. But again, that would be my only comment at this point.
Yes. I mean, essentially, the actual time spent by the IDA on funding court matters is quite minor.
Yeah, we have a letter that we usually write in response, and it'll be the same thing that it has been every year. Basically, it's so negligible that it's not worth doing at this point in time.
Spend more time and effort charging than it would be to do the work. Okay. So with that, Bruce, any other?
I have no comments. It looks very routine.
Okay, so need a motion to approve
So moved.
the audit?
I move that we approve the audit report.
I'll second. Kelly?
Mr. Murray?
Yes.
Mr. Brusso?
Yes.
Motion carried.
Okay. Next, we'll move,
Motion to adjourn.
oh yes, that's true.
I will move that we adjourn the meeting.
Okay, I'll second. All in favor?
Aye.
Aye. Seneca County Funding Corp meeting is adjourned. Next, audit committee meeting will go into the IDA. At this point, Ben Guthrie and myself are present. We have a quorum. Tom Keim should be joining us shortly. First item on the agenda is approval of the audit committee meeting minutes from September 14th. Everyone had received a copy in their packet. Any changes, corrections, modifications? Hearing none, motion to approve.
Motion to approve.
I'll second. All in favor?
Aye.
Aye. Motion carried. Next is the presentation of the IDA audit and management letter.
Okay, so with the IDA, we have a little bit more activity, a little bit more to go through. So
Yes.
the financial statements, you do have copies of those. And again, lots of good information in there in the MD&A and in the footnotes and that kind of thing. Unqualified opinion, and again, audit went very smoothly. But a lot of pages to go through, so we provide you with this executive summary document, which kind of summarizes some more of the important information, pulls us right to the statements, and makes it a little easier to kind of go through and identify specific items. With just a quick comment on the draft, we are still waiting for future factors, which we're going to address after this meeting, which is a component of the MD&A. So you'll see a blank in the statements. The project reporting, which is a required component of your statements by the ABO, we take a look at your Paris report, which is the same thing, reporting projects. We just completed that yesterday, so I believe all the adjustments have been made. We just need to get that into the report. So you will have a final draft, just right now we don't have, probably Monday, I think.
Yeah.
We'll probably by Monday be able to issue a final draft of it. Okay?
John,
Yes.
So I'm Ben Guthrie, I'm new on the board, I'm new on the committee, and I have a hard time with all the acronyms.
Oh,
So can I ask you,
apologize.
MDNA,
Management's discussion and analysis. Okay, so governmental reporting, GASB, requires that your governmental statements, and you'll find it, I don't know if you find it interesting, I find it interesting because it's my business. The Funding Corp and the IDA both report using governmental audit accounting standards, whereas the Economic Development Agency is a not-for-profit, is following not-for-profit standards. So this MD&A you'll see in both of the IDA and Funding Corp reports, but you won't see it in the EDC because it's not a required component. You also see it in publicly traded companies are required to have management's discussion. And it's just some pages at the beginning that provide some additional discussion about the information you see in the financial statements.
thank you.
Yes, please stop me if I throw out anything that you haven't heard or whatever. It's a habit. So the executive summary, if we go to page 1, this is a combined statement in that position. So we have 2 different operating funds. We have your main operating fund for the agency and then a revolving loan fund, right? So that you operate. This is a combined statement that you would see in the financial statements. And you can see some of the changes year to year between your assets and liabilities in that position. And then down at the bottom, the income statement. And again, unqualified opinion, no material weaknesses, no significant deficiencies to report. And I'm going to have us go into before I get into these changes, I'm going to have us go into the next page, which is going to be the operating fund. So we'll address each fund specifically to kind of get into some of the specifics, the main activities that we see happening this year.
Yeah, can I ask you, like, I didn't understand that, what would be the definition of deferred outflows of resources?
I will get into it. So that's a governmental accounting terminology, okay? And we'll get into, we'll take a look at the operating fund and we'll discuss those items specifically. Okay, because there is some change actually this year for that. So page 2, we have the operating fund, and this is your statement in that position, a balance sheet, and again, comparative balances, so you can see what's changed year to year. One of the new things here, and it's not really detailed below, and I do have some financial highlights listed at the bottom, the lease standard. GASB issued a lease standard, FASB issued a lease standard, so everyone in business that's putting out financials knows about this lease standard that's come out, which required you to evaluate any of your contracts you have out there that might fall under or follow or meet certain requirements to be treated as a lease. You have one agreement, the Del Lago leaseback agreement technically has lease components to it, and because it's a large dollar amount, we actually pick it up as a receivable here. So historically, it hasn't been on your books as a receivable. You're just collecting a $100,000 payment every year for the next 2 years. Now it was a 10-year agreement. So you actually have that as a current and short-term receivable this year. So that's new. That's what that information is. But part of that is you have a receivable, but you're deferring all that income because it's not, you can't record it till it's supposed to come in. So what we have down here is deferred inflows. So the GASB, when it looks at money coming in and going out, looks at it more of an inflow and outflow of resources rather than a revenue and expense kind of terminology. So rather than seeing deferred revenue and prepaid expense,
Kind of
you
like
have
between cash and accrual.
yeah. So it's those items that aren't expected to come in yet, but you have a receivable or that kind of thing. The biggest pieces of these deferred inflows and outflows are related to the pension reporting that they're required to do. So the IDA, your employees participate in the New York State pension system, and under the current guidelines, you have to record If the system is fully funded, you have an asset on the books, and if the system is underfunded, you have to put your portion of the liability to fund it fully. And kind of interesting because the valuation, the date of where it is, you actually have the system's current was underfunded when it was valuated, or overfunded when it was valuated. You actually have an asset on your books for the first time with the ERS. And we'll see where it shows up now. The valuation happens in March, so we'll see where it happens for the current year, considering where the stock market is, which is what that valuation is based on. But the pension system has a actuarial study done, and that's how they come up with those numbers. So you don't get to determine those numbers. You have no part in it. You get a report from them that says, here's your portion of that liability or asset. Put that on your books. And then it has these deferred inflows and outflows, which are really meant to avoid any one year where you have a big swing in the amounts. They go into these deferred inflows and outflows and get amortized over time so that you don't have a big hit to your income statement in any one year for that. But again, unfortunately, you have no control over it. You're told what the numbers are, you put it on your books. Okay? And you can see the net pension asset this year, $45,000 compared to a $215 liability from last year. Okay. Some other highlights. So kind of the big changes here have been the decreases due to the, or in the capital assets, due to the last year the disposal of the sewer line, and this year the transfer of the property in the depot for the fire and sewer training facility. And you also had the hillside property, that sale completed, so you recognize some revenue offset by the land decrease in there for that. Okay. And down at the bottom, we can see your net position, so your equity area, and you see the investment capital assets goes down based on those. Investment in the industrial park, so this is the Deer Run property, so you still have some lots that you own, still selling those off. You did sell some this year, which is great, and so you see a reduction in that investment due to the sale of those properties. And then in the unrestricted section, we can see the change year over year. And an overall decrease in that position is $600,000. And if we look at the next page, we can kind of go through the elements of that. So the next page is the change, summarize the statement of changes in net position, or your income statement basically for the operating fund. So we see the rent and lease income, and that's that Del Lago money coming in on an annual basis. Agency fees are up, so you had some projects complete this year, and so you collected some fees on those. Home leasing and Keystone Mills. So that's great. Great to see some economic development complete and initiated. Your expenses, operating expenses, includes the loss on disposal. So the training facility that got provided to the county, you didn't receive any funding for that, so the value of those assets show up as a loss, basically, on the statements here. And you can see year to year the number is kind of consistent. The reason is because last year you transferred the sewer, which same kind of situation, the revenue or everything had been collected in the previous year, so the transfer shows up as a loss. So you probably wouldn't see the same thing this coming year as long as you don't have any of those big transfers of property left. Okay, a little bit of grant income. There was a state grant that you still have out there. Initially $600,000. You've collected over $300,000 of that through various payments, expenses you've already incurred. A little bit of additional expense this year and some draws on that. So that's at $17,000. $10,000 loss on Deer Run. So that's the difference between the selling price and what it was being carried at. Okay. And mainly due to the disposal of the property, the loss in disposal, that's why you see this negative balance here. The disposal, I believe, is $709,000. So if you consider, if you remove that, you actually see that you you have an increase in your net position
It's
this
a
year.
paper loss.
Right. Okay. Any questions on the operating fund or the balances there?
In your audit review, were there any required adjustments made at this point?
Anything other than a reclass entry? I think maybe some reclass entries that we normally do, but I don't think there were any audit adjustments. Nothing material, certainly.
All right.
What else? Oh, we did adjust the deer run. We had to come up with a value for that once we've determined what the correct acreage was and everything on that. But that was a minor adjustment, I think. Okay. So, moving on from the operating fund, so the revolving loan fund, so the IDA received some money from the Department of Commerce years ago and set up this revolving loan fund. Okay, a couple new loan this year for Best Made Products, $90,000. Half the money has gone out as of year end, so that balance is reflected. The other half to come out in this current year. You have 3 loans outstanding. All are current right now, so that's great. Okay. Your income is mostly related to the interest you're collecting on the loans. And then a minor amount of contractual expenses, again, audit fees. So as part of the audit, and I'll cover that in a minute, because it's federal dollars and the way they require their federal dollars to be reported, you show more than $750,000 worth of federal grant money, and therefore they require what's called a single audit, and we'll go through that report in a minute. But so the revolving loan fund, things are moving along fine. You did have an additional loan this year, so any questions on those numbers? Sure, got it. Okay.
So do we want to do, if no one has questions on the IDA audit, do we want to do approval of that and then have John dive into the
Oh, I just
single
just
audit?
got
or do
a
you have
couple.
something? Okay.
Just internal control communications. So one item we did have was the collateral agreement with one of the banks. You were still working on it, so you did have a non-collateralized balance last year, but my understanding is that that's either very close to or is already.
We're just waiting for the statements.
Yep.
So we did it all, but.
Okay, great, good. So that's one item outstanding, but that's being taken care of. So that's the internal control communication. Do you want me to go through the single audit before?
Why don't we do that, go through the single audit, then we can go through it.
Do approvals for both?
Do approvals for both.
Yep. And this should be short and sweet. So again, required to have this audit of your federal dollars. So we take a look at the processes you have for monitoring the loans that you have outstanding and initiating, making sure you're following your policies and procedures and based on the federal requirements of what you are supposed to do. And there were no findings or question costs in the report. So we've issued a clean report on that. Okay. That's the IDA. And again, the letter of communication, you also have no disagreements with management or any corrective misstatements.
So any questions from the board or from the committee on either the regular audit, standard audit and management letter, or on the single audit? No? Okay. So, first item then is need a motion to approve the audit, the regular audit and management letter.
Oh, so moved.
Second?
Second.
Kelly?
Mr. Kine?
Yes.
Mr. Guthrie?
Yes.
Mr. Brusso?
Yes.
Motion carried.
Next item is Can I have a motion to approve the single audit?
So moved.
Second. Kelly?
Mr. Kine?
Yes.
Mr. Guthrie?
Yes.
Mr. Russo?
Yes.
Motion carried.
Any other business for this? Need a motion to adjourn?
So made.
Second.
All in favor?
Aye.
Anyone want to stay on? No? Motion carried. So we've gone through first the funding corp, and now we've finished up the audit committee for the IDA. Next on the overall agenda is the Seneca County Economic Development Corporation. We do have a quorum. Tom Kine and myself are present. Jeff Shipley is absent. First item on the agenda is the approval of the audit committee meeting minutes from September 14th. We received a copy in our packet. Tom, any changes?
No, I make a motion, we approve.
Approve? I'll second. All in favor?
Aye.
Anyone opposed? No. Motion carried. Next is the EDC audit management letter.
Okay, one more time. Here we go. So you have the copy of the financial statements. Historically, we have provided an executive summary for this. However, since you've turned over cemetery operations back to the county, we don't have the multiple funds, and so we didn't provide the additional summary because we can go through the statements similar to the way we did with the funding corp. So we're going to take a look at that this year. And again, unqualified opinion, no material weaknesses or significant deficiencies. So things are very good with the Economic Development Corp from that perspective. If we go to page 4, so this is your statement of net position, your balance sheet. You'll notice we have combined and uncombined, so we're providing comparative statements, but your 2021 is still a combined balance because that last year is when you wrapped up cemetery operations. As of year end, there was no money or anything related to the cemetery in the balance, but it is the amount. So we can see the change overall, net assets without donor restrictions, a decrease. And if we go to the next page, which is the statement of activities, so your income statement, we can see what some of those changes are. The big activity this year was the grant funds. So you received a pass-through grant from the state. So you actually collected all that money and distributed that during the year. So that's the really big activity this year. Your other income is really just your interest income in the EDC. Again, cemetery operations ceased last year, so you don't have any of the money that was coming in from the cemetery, although the cemetery is operating at a loss every year. So at least you don't have those expenses and those losses you were taking every year related to that. And then management and generals are your normal operating costs, fairly consistent with last year, down a little bit. But overall, because those pass-through funds, the amount that comes in goes out at the same exact amount. So no income basically from that. So it's really just your interest income to pay your ongoing economic development fees for that. So overall, you had a decrease of $15,000 this year. All right. So again, you still have $148,000. So there's still money to continue on for several years.
10 more years. Or
10 more years. But continue to look for those opportunities to enter into some economic development agreements or different sources for revenue or agreements. Any questions on the economic development organization and the numbers?
This is turned over to the state, it was just turned over, there wasn't any money exchange or any obligation stuff we paid for in the past that they were gonna pick up. It was just turned over.
You mean the cemetery?
Yeah.
So we didn't even turn it over to the state. We turned it
We got it
over
over to the county.
to the county. And really, it was always, cemetery was always technically a county-owned asset. We only were in charge of the cost side of things, the operation. So yes, all of that was turned over to the county, and then they have, I think, since finalized the actual transition from the county to the state. But yeah, we have no additional obligations, but we are also never, ever expecting anything to come
Yeah,
back from the
yeah,
state or the
yeah,
county
yeah.
as a repayment of the, $800,000+ that was spent on the cemetery.
Yeah, you had some issues there back and forth with donations and what was donations to cover costs there and what were donations that were going to the group that was involved out there.
Yeah, everything is, we're sort of clear of all of that, so.
Yep. Yeah, so everything was recognized last year as a,
That's just, that's my question.
the losses and all that.
So truly, it's just the cemetery's gone, there is no continuing income except for any interest income, and there's really no continuing expenses except for sort of the normal maintenance, sort of like, well, not maintenance, but the audit professional services to maintain the
Right, yeah.
EDC.
So over the last few years, with the transfer of land out of the Army Depot, you used to have some rental agreements or lease agreements there for some of that property. Once that went away, the lease income went away. You haven't had any revolving loans issued or anything like that. So continue to look for opportunities for projects and that kind of thing. All right. You also have the communication of internal control related matters, and there's no, again, no material weakness or significant deficiencies, and we actually have no recommendations this year. So very good job for the Economic Development Corp.
Yes. Okay. Any questions or comments from the committee? No? Fairly nice, easy cut and dry.
Successful operation.
Successful, we didn't do anything, we were successful.
Take the credit.
We did the
Not this
pass-through
year.
grant. We
Yes.
did the pass-through grant this year, which is activity. It's just not any net income gain for the EDC. It's just
Yeah.
coming in and going out. So it's wonderful for Seneca Dairy. They've, been making
That's right.
great progress on their facility as a result of that activity, but yeah.
Again, just coming new to this, I think that demonstrates the real value of the organization. That it worked the way it was supposed to, and it didn't cost a whole lot of money, but the money flowed through.
Yeah.
So that's a
It's
win.
very,
Yeah.
an efficient conduit for this.
Yeah.
So with that said, I'd like to have a motion to approve the audit and management letter. I guess, yeah, I'll second. Kelly?
Mr. Kime,
Yes.
Mr. Brusso,
Yes.
Mr. Shipley absent, motion carried.
And there's no other business,
No?
so motion to adjourn.
So made.
I'll second. Well, all in favor? Aye.
Aye.
So we're complete. Thank you, everyone.
You even cut the live stream?
Yeah, I'm actually stopping